everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing, because we've both identified it's like next 3 months for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now, the question is whether it's next month higher, which I actually think, we probably end up, higher within 2 weeks' time than we are today.
Raoul Pal explains the current consolidation phase in the cryptocurrency market, which he calls the banana zone. He likens this period to past cycles, such as 2017, where sideways movement preceded significant growth. Bitcoin has already risen 600% from its lows, and Pal emphasizes patience, suggesting that substantial gains are still ahead. He predicts Bitcoin could reach $210,000 with a 70% probability, with lower chances for targets like $400,000 or $800,000. These estimates are based on historical trends and macroeconomic indicators, highlighting the importance of long-term vision despite market volatility. Pal views the convergence of technology, AI, and crypto as a transformative shift, with institutional adoption and liquidity driving exponential growth. He encourages investors to stay informed and focus on the bigger picture during this pivotal time for digital asset.
I know the talk is tariffs. I know it's all about what's happening today, what happened yesterday, what did Trump announce? But I go back to the framework that I've been using, which is liquidity. And the liquidity has led this whole price action by 3 months so perfectly. It's been sort of insane. And, I'm just... Peter, I'm just going to share a chart. This is from Global Macro Investor, just to kick us off on how I'm looking at this. Now, this doesn't have today's price action, but again, price action in Bitcoin is actually not that bad today. Not like the Nasdaq's getting nuked, and I'll talk about the Nasdaq in a sec as well. So, global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. But basically, should be the bottoming zone. What is happening here is there's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil, is actually financial conditions are easing really, really fast. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Forward, we've got global M2. And the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So yes, that's the financial conditions index. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. The last time you came on, Jamie, was pretty much at the tail end of a panic back in September last year. At the end of that god-awful range, nobody believed we'd ever get out of it. You came on and said, I think we're all going to be fine. I was of the same, and it all figured out. So lay it on me. Where are you in this?
Yeah, well, I mean, we both have our own hypothesis about what drives markets, and then we build frameworks around it. And obviously, your framework has informed a lot of what I do and how I think as well. But I created my specific macro framework based on the inputs that I saw and backtesting. And you build these, personally, I build these frameworks because I'm trying to eliminate a lot of the subjective bias that creeps in when you're investing to try and reduce errors. And my models are also saying that financial conditions as of starting in February and then accelerating into March, mid-March, all started to pick up and gave me the signal that Bitcoin should do very well over the next, over the foreseeable future, 3 months, 6 months, 12 months.
Yeah.
I couldn't predict what the Trump administration was going to do with tariffs. especially that formula that they've applied. I think that has caught everyone by surprise, even those that expected Trump to perhaps surprise on the upside. And so, even with that, you now get so much more pressure on the Federal Reserve to act. And with that, we know typically asset prices respond quickly. And so it does seem like this is a growth shock that will be met with a requisite amount of stimulus, and that typically is very, very bullish for risk assets.
Raoul Pal explains that Bitcoin is entering a major growth phase called the banana zone, after a period of steady gains and consolidation. He expects strong price increases ahead, driven by growing institutional demand and adoption, with Bitcoin possibly reaching $200,000 to $400,000 in the next few years. Despite some current economic weakness, Pal believes the overall financial conditions are improving, similar to the 2017 market cycle, and advises patience as big gains usually follow periods of volatility. He sees cryptocurrency as a top asset class for future wealth growth.
That just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing because we've both identified it's like next 3 months for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now, the question is whether it's next month higher, which I actually think. I think we probably end up, higher within 2 weeks' time than we are today. Put it that way. I don't know. So how are you thinking about, let's kind of zoom into your framework, I guess, in a bit more detail, because you've probably got a bunch of charts to show and other bits and pieces.
Yeah, I'd say, when I looked at the DXY back a couple of weeks ago and saw that massive move down, which was a 3-day consecutive move of more than 2.5%, which was in fact like a 2.5 standard deviation, 3 standard deviation event. Every single time that had happened in the past, over the next 90 days, Bitcoin was higher and substantially higher. I've actually got a chart around that as well.
Yeah.
So I might just bring that up so you can see that on your screen now. So this is just the Bitcoin chart with these large DXY moves that occur over time. And the subchart is just showing you the percentage change. But when you look at what happens over the following 90 days, and there's only been 8 of these in the last sort of 12 years. So sample size is relatively small. So take of that what you will, statistical significance, from a purist standpoint might not be there, but at least we've got over 12 years, 8 occurrences, every single time Bitcoin is up substantially. And this yellow line here is just the average of all of those 8 instances. Now we can see where we are today. We're right at the bottom. This is the worst performance post that signal of the previous 8 signals that we've seen over the last 12 years, but pretty much in line with what happened in 2015. On average, though, Bitcoin is up 37% 90 days later, and 1 standard deviation move above that is 63%. So that really brings us towards 120, 130,000 if it's just an average move. And if it's something more, then, it's actually probably about 110, 115,000. But if it's a 1 standard deviation move higher,
but new highs.
Yeah, it's new highs. And so that was giving me a lot of, confidence when we started to see that big dollar move 2 or 3 weeks ago. But since then, it's actually depreciated a lot more. So I think that that really does set up for a strong move. Now, the problem that we have just in the short term, Raoul, I think, is around tax loss or tax season in the United States. And if anyone's looking at their crypto portfolio right now and they've bought in the last 6 months, they're on tax losses. So they might actually dampen things down.
Raoul Pal explains that Bitcoin and crypto are in a normal consolidation phase called the banana zone, setting up for a big rally soon. Despite slow price movement now, Bitcoin has already risen significantly and is supported by improving economic conditions and growing institutional interest. Patience is key, as strong gains usually come after these sideways periods. He also notes that the strength of the US dollar and financial conditions influence crypto prices. As the economy improves and conditions ease, Pal expects Bitcoin to reach much higher levels. These are not guarantees but helpful insights for investors to understand market trends. What do you think will drive Bitcoin's price the most in the next few years? How would you handle a long consolidation phase in crypto? Let me know in the comments.